Let's now have a look at the Australian dollar and see how it is sitting in this morning's session. It's looking pretty soft out there, I must say. 73.30 is the mark as we head into the open. And for more of the day's currency plays in the economic outlook, Clifford Bennett from ACY Securities joins us now live. Clifford, great to have you on this morning. Let's start with the Australian dollar then. There's been a few calls this week that it might see that 68-cent mark. What are your thoughts? The backdrop looks pretty soft, doesn't it?
It does indeed, and it has been a factor that's been helping the share market stay aloft, but I'm not sure how long that will stay in play either. But the outlook for the Australian dollar, our target's always been 70 cents. We were the first to call that, well ahead of the market, with risk to sort of 68.50. So I think that downside momentum is going to stay in place. And basically, there's no get out of jail free card for the Australian dollar. There's nothing on the horizon as a catalyst to turn that around. We're certainly looking at the risk of going into a recession in Australia. That is no sharp rebound from the current lockdowns or the lockdowns being extended into the fourth quarter. I think recession, don't think no chance of a strong rebound. And I really think a factor in the global perception of Australia is that, well, we went on a consumer, buying binge and renovations and all sorts of construction sort of binge with all the stimulus measures, and we won't have that to the same extent this time coming out of this lockdown experience. So therefore, we're not going to have that quick recovery that many in the marketplace and the government and the RBA are looking for. So there is real risk of disappointment there in terms of Australia's aggregate growth data outcomes moving forward.
Clifford, let's have a look at commodities in more detail. Gold specifically, it was a pretty wild session yesterday, wasn't it? Early on in the Asian session, it came off significantly. It has rebounded somewhat overnight. But what are your thoughts on that move?
You are so right. And we've seen moves like that happen before, particularly in the Australian dollar early on a Monday morning. Often the momentum of Friday's close is marked lower in an exaggerated fashion. And I think that's what we saw for gold yesterday morning. The market was very oversold there. I think we're going to see some congestion here, a little bit of weakness. That's the hourly chart there, a little bit of weakness perhaps, but I do see gold stabilizing more than other commodities to again trend higher as a hedge against the surge of Delta and the supply chain disruption that is going to come with that around the world. Whereas for other commodities, I'm not so keen. I think most commodity markets have probably seen at least medium, if not long-term tops. But gold could become the hedge it always was historically once again over the next month or two.
Clifford, let's finish it off with a chat on oil. I know you've got another chart. When it comes to crude, what are we seeing? More downside pressure, do you think?
I think so. I mean, we called a long-term top in oil about a month ago. I'm sticking to that scenario, even though we've had some very strong bounces. And those rallies, though, do tend to get sold off. I mean, looking at oil today, I think it can rally a little bit further, have a little bit of a run to the upside even, but that would be a bounce to sell. Because I do see US global growth slowing as a result of this Delta surge. I'm not talking about, growth comes to a standstill, but certainly less growth than people were pricing into oil, global growth, than was previously the case. Therefore, oil is overpriced, and it had probably run too far in the first place anyway, sort of betting on some kind of nirvana global economy outcome coming out of the pandemic, which isn't going to eventuate, never was. And so I think oil could be the primary trade in hedging against a global slowdown.
Clifford, great to check in with you this morning. Thanks so much for joining us from ACY Securities.